The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another beautiful Wednesday, July 25th. Today we celebrate Merry-Go-Round Day, or Carousel Day, National Day to remember the carousel or the merry-go-round. Not exactly sure if there's a true difference between the two. The merry-go-round or carousel was invented for Spain to train and Arabian horsemen in the 12th century for combat training, and later, I guess, in Spain. But it is I don't exactly understand what it was, but maybe they spin people around on wooden horses and see if they could stab somebody going around. I don't know. But seems kind of strange. But, of course, now it's the kids' ride, kind of lost favor. You don't see a lot of carousels anymore, but a lot of carousel collectors as an item of history. Had a lot of news going on. Not only that, but we've got a lot of stuff in the markets. Of course, lots of earnings calls out, and we're going to go through those in a minute. I'm just going to check volume. We are up a little on the S&P. Of course, every time we go down a little bit, they trot somebody else out to say Bernanke's going to shower us and with money falling out of helicopters once again. Well, we're up, 3 points on the S&P. Volume's light, 2.2 billion shares. We'll see how that actually falls out by the end of the day. First thing I wanted to point out was one of my trades from my newsletter last night. We had the TRIP, which is TripAdvisor's TRIP, short in the newsletter. We covered last night at 35 or better. I think it got down to 35.55. But I've seen a couple of different quotes. Anyway, I put my order in for 35, got hit. We had a nice little close, and I was short about about 46 bucks on this. Anything better than 45.25 was recommended. You could have the high up there at 47.81, but you could tell this thing was topping out. Also, it was kind of being driven somewhat by kayak. But no love with kayak coming out Thursday or Friday. But you could really see that paying attention to both to the stock and the company and news around the company, that it was looking fairly tough to see if it could keep any kind of growth curve going. And it did fall out of bed. Like I said, I was short 46 and some change, and ended up with a 24.5% profit overnight. Just one. Of course, the last one we had, I'll show if we get time. We've got a guest at the bottom of the hour to talk about algorithms and how they're used. And why do we care? Because, some of the biggest companies are built on a single algorithm. Think of Google. But we're going to talk about it with our guest, and we will be getting on with it. But TripAdvisor's another one for the win column for the Path of Least Resistance daily newsletter, which you can always get a free 2-week trial. The Titanic market theory of Calamity Joe Granville. Joe's been on TFNN before. He is what they call the perma bear. He has yet to see a market that wasn't going to get blown apart, beaten, cut in half, quartered, and then 16th, and then thrown into the seas. But anyway, he has even a stopped clock is right twice a day. If he continues to always say there is a huge market meltdown coming, eventually he will be right. But he's one of those guys that's did that, got famous in the 87 crash, and I don't know if he's done anything worth merit since then, other than be perpetually declaring the end of the world. And just like a astrologist, if you make enough predictions, eventually something will go right. So we've got some other things going on. But anyway, what I was going to bring up is his theory, Titanic theory, and that is that when a ship's going down, everybody runs to the rear of the ship. What we are seeing is people run to the ship in droves, and how do we know? A yield low of 0.22%. I think that's in the 2-year bond auction. It saw a bid cover ratio of 4.0, which is the second highest demand for such bonds ever, according to Bloomberg. It means I think that there were 4 orders for every one that they could actually complete. People are looking for places to hide their money. If it's not in treasuries, it is in bonds and also in stocks for somewhat, and I think that's keeping us up. Unfortunately, when a ship busts in two, it's only a matter of time before it heads down. I suspect we've got everybody dancing all over the back deck of the Titanic, and we've got a pretty good continued look where we're probably going to see that 1265 tested on the S&P, potentially more or lower. But right now, every effort to keep this thing up probably is actually making more energy to take it down instead of letting the energy out now. But we'll be seeing what's going on. I suspect that we could, or they could hold the market up all the way through the FOMC meeting next week, because they trot out and dump out people, it seems, and puke out people almost every single day that's telling us that the FOMC is coming, the FOMC is coming, just hang on, the FOMC is coming. Meanwhile, we see stock after stock slaughtered after hours with just a handful outperforming the market. One of those was Apple. I didn't get the last quote on Apple, but it was around 578. Not a huge downturn, $22. Actually, the biggest problem with their earnings was that they're starting to see margins come down a little bit. Without being able to ship the latest iPhone 5 until the next quarter, so we've got at least 90 days before it ships, they say. So we're going to have, it's going to be a good 180 days before you see those profits. Sales were up on their tablets, were up a little bit, and I suspect that's going to be enough to carry them through. I'm not a big fan of shorting Apple. There are a lot of other stocks like Trip and other ones that were presenting themselves. We'll talk about them today. The huge numbers in iPads could come through over the next quarter. They finally got settled the lawsuit about the name, and I haven't seen anything. Looked through all the documentation last night. Still looks like they've never tried to ship the iPad in a Chinese form. I imagine that's probably going to come out in this quarter, if not in the next few days. But I don't think that Apple has $1,000 written on it either. With rare exceptions, CFOs make poor CEOs in technology companies. Mountain Lion, their latest version of their Macintosh operating system, ships today. It's not going to be a big income maker because I think it's only a $20 upgrade. But it does fix some problems. Android continues to outsell them in numbers 3-1, and we'll talk about some of those things later. Buffalo Wild Wings came out. I kind of kicked myself for missing this one. I normally go there on Tuesdays, or did go there on Tuesdays and Thursdays, because they had wing and chicken nuggets on half price. Well, they drastically raised the prices about 2 weeks ago. They also got rid of 2-for-1 appetizers on happy hour. It makes me think that something was going on, and I just didn't go to look at the chart and really look through it. I knew I should have when I started seeing their policy change and get restrictive. Either they have so many people they can't stand it, or they were trying to make the last part of the earnings push look as good as possible. I suspect all my wonderful 2-for-1 happy hours will be back shortly. But what we did see is them actually saying that the prices of chickens are going up because literally the size of chickens are going up. The actual girth of a chicken. Some people are saying they can't even get these chickens to stand. They are so massive now on these little legs. But they sell it by the pound, so chicken wings, they're actually, the prime market is chicken breasts. The bigger they can make these chicken breasts, the better. So we've got these kind of little on the juice chickens really pumping up and making their little wings weigh more. And Buffalo Wild Wings says that's hurting them. It's hard for me to believe that a slightly heavier chicken wing would destroy Buffalo Wild Wings. I suspect the truth is somewhere elsewhere. And the strange thing, McDonald's actually tried a bone and wing product 10 years ago. It has reappeared just in the last few weeks in stores in Atlanta. And that is from a report from Scott Hume at Burger Business. I suspect maybe if McDonald's really got into the business, maybe wing prices would go up further. So Buffalo Wild Wings may have seen its heyday out there, but we'll have to see. Netflix also getting slammed today after earnings. Streaming was up logarithmically. Their DVD rentals were off tepidly, let me put it that way. But the view of the investment community now is that the licenses that they are getting for the movies that are showing these unlimited viewing movies are going to change. Now that they see the views up dramatically, these content providers are going to renegotiate these streaming licenses for viewing their movies and try to get some bucks out of Netflix for it. Most people believe that while their earnings were a little weak, the forecast basically takes this into effect and why they're off so significantly. It looks like their profit margin, if any, and their margins are going to severely go down. At least that's the call for Wall Street. Because of their success, they will fail. Kind of a weird idea the way they have. Venture firm Andreessen Horowitz scored its first big hit when VMware bought Nursa, I think it's Nursa, for over $1 billion. This is a Israeli startup that makes a how can I say it? Makes a virtual router. You notice that also Cisco's kind of been hammered a little bit. Part of this deal is that a lot of people now are looking at what Nicira actually sells. And why would someone pay over $1 billion? I think the deal was worth $1.2 billion for Nicira. That's because the people that do this kind of programming and design and hardware design are very thin. There just isn't enough people out there that know this. With sales of just over $100 million, $1.2 billion for the company. I'll talk a little bit more about Mark Andreessen, who's part of this part. I'd met him several times when he was in school because I lived in Urbana, where he went to school. Met him in my computer club and some of the other things around town. It's kind of a smaller town for a college town. I also met him one time at SGI, where I didn't know what he was doing at the time, but became evident, and we'll finish that story up when we get back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we left, we were talking about Insera, firm that was bought out just over the last few days. Andreessen Horowitz, a big VC firm, basically is has another big winner in this. For you that don't remember, Mark Andreessen basically started the Mozilla browser, which became kind of Netscape. Later sold, I think, in 98, 99. But ended up being a good stepping stone for him. He started with the browser wars. I met him, like I said, when he was young. He must have been 19 or 20 at the time. After graduation, I ran back into him and got an introduction from him to John Clark, who was running SGI at the time. The company I was working for was trying to make some hardware for their products. And I got to talking to him fairly in depth about the future. And at the point, he was sitting there looking at Linux and other operating systems like that, some kind of Unix. And he really wanted to go whole hog after Linux and actually kind of develop a box that ran on an open operating system for high-end users and go after the PC marketplace. All his idiots in the boardroom thought he was insane, and he quit, maybe 2-3 months after I talked to him, and went off and became very successful in other firms also. But going to be kind of interesting. We'll talk a little bit more about that maybe on Friday's show with Tom O'Brien when we talk nothing but technology. Home sales disappointed. Home sales fell 8.4% for the previous month. They're still up 15% from a year ago, but I suspect we're going to see that we've hit some kind of temporary plateau. If you look at the IYR, pretty good indication that that's happening. Broadcom actually has released its Gigabyte wireless chip. They've had a nice little pop today. I think it's BRCM is the symbol. The big deal is now a lot of the new phones coming out, especially Windows Phone that use Windows Glass, are going to need to be able to send data really rapidly from a television to a smartphone or from a PC to the television in your living room. All these things are going to rely on very, very high speed gigabit internet access, and basically it's a fairly inexpensive chip, and I think them and Qualcomm are going to continue to do well, although I think Broadcom has come out with their version just a tad earlier. A lot of times that's all it does and takes to get some business. Nice little pop on Broadcom today. Let's see, that's the next one. I already talked about it. We're going to have a guest when we come back. His name is John McCormick. He's written a book called 9 Algorithms That Change the Future. He explains how your cell phones, laptops, other computers do amazing things they do. But we've seen giant fortunes made out of algorithms. What are they? We're going to talk a little bit about Google and how their page ranking system works. And then maybe what's in the future for algorithms. Where the other companies or what other companies are going to come out with algorithms that are going to make billions and billions and billions. I can't actually do that accent. It's been too long since I remembered billions and billions of stars. Of course, I grew up watching the special from PBS about interstellar stuff. Now I can't remember the guy's name, the big scientist. Oh, well, I'll think about it in the future. Anyway, when we come back, we're going to be talking about a few things like that, looking at the markets, watching the volumes here at the end of the day. Volume still, as we go up, has been tepid at best, 2.3 billion shares. That gives us kind of a projected about 3.4 billion shares for the end of the day. Again, we still have a huge amount of earnings coming out this week. So probably being a little guarded, although we've had some success stories in IBM and CAT today. Most of them have been a little weaker. I suspect that the belief that the Fed is going to come is overwritten. I think they'll jawbone that they're just always around the corner. But they're going to keep their powder dry, wait for the whites of their eyes before they act. And I suspect we'd have to probably see something like 1250 or even less than 1200 on the S&P before the Fed's going to act during an election cycle. They have made a pretty good policy of standing back. They may jawbone the market a lot. I suspect when we get to the announcement next Tuesday, it will be goose eggs, and the market will continue to tell us that it is heading not hugely lower, but lower enough that I don't want to be long and short, and there are a lot of short opportunities out there. We'll be back in a minute.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We certainly live in a world that's dominated by computers today. That's no secret or big news. What probably is the news is what actually drives those computers to do our bidding every day. We have on as a guest today John McCormick. He is a computer science teacher and researcher. He grew up in New Zealand, studied mathematics and computer science in England, now lives in Pennsylvania. He has a PhD in computer vision from the University of Oxford and works in the research labs of Hewlett-Packard and Microsoft. He is a professor of computer science at Dickinson College. His span works several subfields of computer science, including computer vision, large-scale distributed systems, computer science education, and the public understanding of computer science. Welcome, John.
Thank you very much.
You wrote this book, 9 Algorithms That Change the Future, and we tend to focus on investing in trading TFNN, but a lot of these algorithms find their way into everyday use. I don't know, most people think about it, but they use Google every day, and that's an algorithm. What is an algorithm, and how did Google come up with something with an algorithm that actually did something neat?
Well, that's right. The main idea behind the book was to explain a bunch of the amazing things that computers do for us every day, just ordinary computer users I'm talking about, not high-tech workers or anything like that. And as you pointed out, one of the most obvious examples of that is whenever we go to a search engine like Google or Bing. It's absolutely amazing, really. we get back in a fraction of a second the few relevant results that are relevant to our query that are culled from literally billions of pages out there on the World Wide Web. And the question is, how do they do it? Well, I'm not going to explain in detail to you right now, although the book does indeed attempt to do that. But the key is this idea of an algorithm. And an algorithm is really just a recipe or an exact set of instructions that a computer can follow to solve a problem. And what the founders, the co-founders of Google, Larry Page and Sergey Brin, did at Stanford some years ago now was come up with a new algorithm for ranking web pages as to whether they are relevant to your query or not. It's now known as quite a famous algorithm, the PageRank algorithm, and that's just one example of the algorithms covered in the book.
An algorithm really is, you kind of think of it, I think of them almost kind of as a formula. If they're really, really good, they tend to be very, very short and sweet to the point, kind of like E equals MC square. The smaller and more direct it is, the more powerful they tend to be. Algorithms tend to be kind of very focused opposed to giant programs, right? What's the difference between something like a giant program and an algorithm? Yeah,
that's a good question. So really, algorithm tends to concentrate on the abstract notion of how to solve the problem rather than the, many thousands of intricate details involved in actually writing a computer program to, say, display something on the screen or to allow you to click on a dialog box or something like that. So algorithms are more like the abstract ideas. But since you brought it up, there is this interesting distinction between a formula and an algorithm. You mentioned E equals MC squared, and some of your listeners may have heard of another equation related to finance called the Black-Scholes equation, which is used to compute the price of an option under certain assumptions. So things like this are formulas because you can work them out, you can write down the symbols and work it out just like that. Whereas an algorithm is really more of a procedure for first do this, then do that, then do that, then do this other thing, and then you'll have the final answer. And it could involve, in fact, doing the same thing over and over again as the data changes in order to compute the answer. So that's the real difference between a formula and an algorithm.
Well, that's a good point. For the most part, option market makers were shoved out into the street in front of the New York Stock Exchange as the unclean, as lepers, because there was no way to actually price those options that anybody could agree on. Finally, a way of at least coming to some kind of close numerical value for options actually made them mainstream. So they work in finance, they work for all kinds of things. My question to you is, as we're looking through your book and we learn basically some of these, like the PageRank algorithms or other algorithms out there, they can be short and sweet. They can be anything from an algorithm or that basically is fuzzy logic, like making sure your car drives the right speed on cruise control. They don't have to be earth-shattering, but they are just that kind of, like you said, recipe for doing something right.
That's true, but the algorithms that I presented in this book, and it includes quite a range of things, so we already talked about the web search ones, including PageRank, but other intriguing ideas like public key cryptography, which underlies all secure websites on the Internet. Every time you go to a secure website, you're using this amazing idea that was actually invented in the 1970s called public key crypto. And although at the heart of it, each one of these algorithms has an idea that, fortunately, can be explained without relying on a lot of detailed knowledge of computer science. So I really try to explain it in a way that anyone can understand. But nevertheless, these are really brilliant ideas that I think are truly intriguing, and they're things that people will be quite interested to find out. Just how does your computer ensure the security of a transaction between your laptop and, say, a server at Amazon, even when those two computers have never communicated with each other before? How could they possibly agree in advance on a code that someone else who's listening in would not also be able to detect and infer what you're talking about? Well, it turns out there is a way of doing it, and it's based on this idea called public key cryptography.
I think the guy that actually developed that was in a big row for years with the U.S. government over it, is actually getting ready to go public and launch his company. Phil Zimmerman, I think,
Right. Yes,
Yeah.
that's a closely related idea. His ideas are built on the original form of public key cryptography, which was invented by three. It's known as RSA, which are the initials of the inventors, Rivest, Charmier, and Adler. But there's a very interesting history to all of these ideas, because it was found out many years later that, in fact, the British government had invented or discovered the same ideas in advance of the RSA trio, but the work was done in a government laboratory called GCHQ. It's the equivalent of the American NSA. And so the work had to be kept secret, and it was only revealed relatively recently that these discoveries had been made earlier than first thought.
What is the some of the algorithms that are popular, at least in finance, are things like just matching orders. And we've seen algorithms. Is there a perfect algorithm? We saw. I don't know if you are much into finance, but the news about Facebook has been kind of legendary. You're not always guaranteed to get an answer back from an algorithm. You don't know how long something's going to run a lot of times. And in the case of Facebook, the programmer stuck in basically an endless loop and destroyed Facebook's IPO launch. There's nothing as a perfect algorithms that can't find a flaw. I guess that's the biggest thing everybody's worried about, especially when they drive things like elevators, and even Google's now working on algorithms to drive cars.
That is correct. So you brought up a lot of very interesting points there. One of them is that, at least in principle, a correct algorithm will always terminate and will always produce a correct answer. The problem comes when we take that abstract algorithm and actually implement it in a computer program. History has shown that for anything but the most trivial algorithms, very often there will be bugs in the way that it's implemented, and this can lead to problems. For instance, what you pointed out, if the computer goes into what we call an infinite loop, it's just repeatedly processing the same data. Perhaps it's looking for some data that isn't actually there, and it's just going through a list over and over again. That would be one example of an infinite loop. So, yes, in practice, we often see problems with algorithms, and a lot of the research done by computer companies today goes into trying to prove the correctness of computer programs and to eliminate bugs using automatic techniques as much as possible.
Now, when we look at these algorithms, especially the ones you look in the book, they don't seem to be very fuzzy. They seem to have, like you said, a very defined set. A lot of the stuff that we do now, from whether it's having a thermostat in your house that not always turning on and off because it knows to kind of give a little bit of play in the temperature before it's always kicking and turning off air conditioners out there. What's the difference between? Is that just pure implementation in your mind, or are fuzzy algorithms a definitive form of algorithm?
Well, it's an interesting question. I wouldn't characterize algorithms themselves as being fuzzy, but I would make a distinction, and I think it is an interesting one that you bring up, between algorithms that operate on certain data. For instance, your credit card number. Your credit card number consists of a fixed number of digits, and you can tell a computer exactly what those are, and there's no question, once the computer knows the credit card number, there's no question of what it is, although it may then try to encrypt it or something like that. In contrast, there are other algorithms that operate on uncertain data. For instance, algorithms that do handwriting recognition or face recognition. They are taking as input a photo or an image of your handwriting that is subject to all sorts of noise, and the next time you take a photo of the same person, or the next time the same person writes exactly the same letters, they're not going to look exactly the same. So the algorithms that deal with this kind of data have to process it in a very different way that is not too brittle. It's somehow able to have the flexibility to generalize what are the underlying features of that face, what are the underlying features of that sequence of letters that determine it's an ABC rather than an XYZ. And one of the chapters of my book is devoted to this area called pattern recognition, which is really a subset of artificial intelligence. And there are algorithms. The algorithms themselves are not fuzzy, but they work well on uncertain inputs.
One of the questions I wanted to get to was no doubt you probably are in a sea of white papers this time of year, and papers destined to actually be published. Is there anything really in the scheme of people writing papers like Sergey did back probably 15 years ago now, or longer? Is there something out there that really has caught your eye as something that has the possibility of changing the world?
Interesting question. I don't know of anything that is sort of just about to make breaking news. But just as an example of the kind of things that people are working on all the time in the world of research, I'm actually talking to you right now from Cambridge in England, where I'm at one of the Microsoft research laboratories, and I saw a very interesting talk here a couple of weeks ago about some work by a researcher at Stanford and another person at Microsoft, and they had been studying the problem of it's a very simple problem. Suppose I give you, on a sequence of days, the stock market either goes up or down. It goes up, 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 down, down, up, 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 up. Suppose I tell you that sequence. What would you guess the stock market's going to do the next day? And, would you like to short the market, or would you like to buy in that market as a result of that sequence? So it's a very simple question, because the only inputs are a sequence of ups and downs, right? Up, 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 down, up, 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 up. Now, if I give you that exact sequence, you're probably going to tell me, I think it's going to go up tomorrow. I'll buy some more. Or if I said it's been up, down, 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 up, down, 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 you may say, okay, I'm going to go short on this one. So what I saw in the talk was they had actually analyzed this kind of sequence of inputs and come up with an algorithm that does better than previously published algorithms on this type of input. So in particular, what it doesn't do is let you sort of do better than the market on average. But what it insulates you from, this particular algorithm they came up with, was large downward swings. So it enabled you to greatly reduce the risk of being hit by a big downward swing in the stock market, while still gaining the benefits of going up when the stock market overall tends to go up. So, obviously this algorithm they were discussing is based on somewhat simplified assumptions, but they had run it on real data, and it actually seemed to work pretty well. Like I say, no one was going to get ridiculously rich by running this, because you would just get the average gain of the stock market when it gained, but it would insure you against extreme losses when the stock market went down, and I thought that was a very interesting example of an algorithm.
Is this the Infer.net crowd over at Microsoft Research?
Actually, this particular paper was not done by anyone who's worked on Infer.net, but it is part of the same organization. Microsoft has, I think, over 900 computer scientists these days in its research labs whose mission is to advance the state-of-the-art of computer science. They don't work necessarily directly on Microsoft products, but they work to invent new algorithms and to advance the state-of-the-art of computer science.
What's this guy call this algorithm or his paper?
Well, the particular one I was talking about is by someone at Stanford called Michael Kapralov, and the Microsoft person.
We'll be right back. We're going to take a short break, and we'll finish up the bottom of the hour with John McCormick. His book, 9 Algorithms That Change the Future. We'll explain a little bit more about how cell phones, laptops, tablets, computers, Google works. We'll be right back with you, John. Hang on through the break.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We've got just a few minutes to finish up the show here today. We've got a special guest, John McCormick. He's written a book, 9 Algorithms That Change the Future. You can get it on Amazon. If you're thinking about investing in technology, a good starter with no big words and not a lot of math to get you the idea of how these products work. Mr. Buffett, the biggest investor ever, says, invest in what you know. You don't have to write it. If you just have a general idea of how a lot of these things work, you could probably be a much better investor. I had a couple of questions, and it goes to actually technical analysis in the stock market. One of the first things I bring up to people that beat me to death with questions about how the stock market works is they believe that a moving average has anything to do with the price of a stock. And I try to explain to them that by definition, any moving average will always be 90 degrees out of phase to the underlying signal. in a probably less technical way, can you, as a mathematician, give me a little insight that you have there?
I hope I'm not going to disappoint you there. I don't think I'm enough of an expert on stock pricing to give an authoritative answer. I mean, obviously, a moving average is, it doesn't help you predict what's going to happen next. So, in that sense, you have to use it with care. But it is what it tells you. It tells you, the average value over a given window, and that can be a useful thing.
Okay. The other thing is that most people have probably never run into is something called Nyquist sampling rates.
Mm-hmm.
And I don't know if you have anything to say on that, but generally the big problem I find out is everybody is always trying to trade at a time length that they sample at. And Nyquist, kind of a good approximation that you get a lot of aliasing errors in sampling data when you don't sample at least twice the rate that it came out at.
Right, yes. This is actually quite an interesting area of mathematics to do with reconstructing what we call continuous signals based on discrete inputs. So suppose we have some kind of signal like the noise I'm making now can actually be represented by a wave going up and down telling you, how loud I'm talking at any given instant in time. And it turns out that if that signal has certain properties, which is that there aren't too many high-frequency components in it, then, Nyquist showed that you can actually reconstruct that continuous signal based only on a certain amount of discrete samples of the signal. You don't have to know what it was doing at every single instant in time. You just have to know often enough. And there's a certain limit called the Nyquist limit that tells you how often do you need to sample that signal in order to reconstruct it perfectly. So that's actually a very profound and beautiful result in mathematics. I don't personally know how that applies to the stock market, but it sounds like you have some expertise in that area.
It does. It's just it's sometimes hard to tell people that you can do a nice sample like a 50-day moving average and see that it's 1.5% better than the flip of a coin, and whether that's enough of a edge, and whether or not it's even a self-fulfilling prophecy, just because people use it. So there's a lot in that. Most of the time, people will trade at 10 minutes or 5 minutes, and if just as a kind of somebody that was involved in sampling a lot of things, I would almost say that if you were going to trade on 10-minute time scale, you'd probably want to look at a 5-minute chart. You'd want to look at something that at least had some kind of Nyquist relationship. I want to thank you, John, for joining us here today. Again, the book is 9 Algorithms That Change the Future, the ingenious ideas that drive today's computers. If you're investing in technology, I recommend it highly. And I want to thank you for being on the show, John.
Thank you so much, David.
You bet.